You've got tit for tat taking place. How much tat is there? How much tit is there? Sorry, pardon what I just said.
Yep. I think that the point you raise is you're right. China is running out of room in terms of goods to place tariffs. So our worry is that do they move to services and investments? So ironically, as you know, the US administration is trying to push on tech, IP, market access. But if this rebounds and they run out of goods to tariff, they could go into, in fact, restricting market access, which would be quite ironic, since that was the purpose of the whole exercise.
Right. Well, I'm going to just bring up this chart here, Terry, and this is just giving us an idea of where we are with the tariffs at the moment. And let's just bring this up from our GTV library. And what we have at the moment is something like $500 billion worth of annual imports from the US into China. That's the blue bar. The white one is the number of exports. Now, these are all visibles. We're not looking at invisibles here. So this is the 50 billion original tariff level that we had. Now, we've got 250 billion in total. So that gives us an idea that we're halfway, effectively, to everything being put tariffs on coming out of the US into China. The thing is, the Chinese don't have that sort of wiggle room. So I was just asking Steve that very question. What can they do in response?
Yep. What they could do is restrict investments. I don't think, as people have said, they go the nuclear option, actually dumping US treasuries. They can restrict market access or make it very difficult to do business in China, which, as Steve mentioned, that a lot of US businesses would like to have more activities in China than they currently do. So ironically, there could be a restriction coming in as opposed to actually a market opening up.
And what we've seen, Terry, is that the government is trying to kind of shift to this pro-growth stance right now. And it seems like when it comes to fiscal spending, they certainly have ramped up at a very fast pace. Is there a level of spending that worries you right now that could impact China's credit profile?
Well, it's a balancing act. As you know, earlier this year, we saw some level of deleveraging in China. But in recent months, that's slowed down quite a bit. I think it is to balance the fear that the China economic growth may be slowing. So it's going to be a lot of fine-tuning. But the current trajectory is still, I guess, at a lower level than it was in previous years. So that's a plus. But on the downside, it's still going up.